In the past 24 hours, more than 170,000 traders were liquidated from the space, with total liquidations that come in at above $600 million. The largest single liquidation order happened on Hyperliquid on Bitcoin USD with value of over $11 million. Here I want to remind you something very important. When you're trading or when you're investing, never invest more than what you can afford to lose or more than what you're willing to lose. If you can't sleep calm when you know you've invested in the markets, that's an issue and you're playing this game in the wrong way. Don't use high leverage. High leverage increases the risks, not the profits. Don't chase fast money because there are two emotions that will make you lose in this space, and that's greed and FOMO, fear of missing out. And impatience, those are your worst enemies. So try to avoid being emotional and chasing fast money. And again, breaking your own trading rules is the most dangerous mistake. Don't trade out of emotion. You only need to trade when you're convinced and when your setup shows up. That's on trading, but when it comes to investing and for the longer term, I want to talk about something which is a bigger topic, and it will completely change the way that you look on crypto prices and on projects when you're trying to research and find good projects. Most people think that valuation in crypto is very simple. Price goes up, it's a good project. Price goes down, it's a bad project. But that's not how it works. This traditional way of valuing crypto is broken nowadays. And the way to measure the true value of any blockchain is very different to what it used to be. And I'll try to break it down for you in this video. So right now, most people just look at one simple thing, and that's the price. Bitcoin is up, let's go and buy. Ethereum is down, we panic, we sell. But the truth is, price alone doesn't tell you the real story behind this project. It's like judging a company only by its stock price without ever looking at how much money it actually makes or how many customers it has. Crypto itself is a network, and networks have value because of usage, because of activity and growth. That's where the old system breaks. We've been treating crypto just like stocks, but it's actually more like technology, a living network that grows as more people use it. So what I recommend and what in my own opinion is a better way to measure how good a crypto project is, that's looking at the on-chain analysis. Basically using data that comes directly from the blockchain to understand how healthy and how valuable a project really is. And key simple metrics that you can use, and we can look at examples shortly, that's the active users. How many people are actually using the network, sending, receiving, or interacting with smart contracts? The second point would be transaction value. How much money is being moved through this blockchain? And supply and inflation. Is the coin's supply fixed, like Bitcoin, or is it inflating like some other altcoins? And a fourth is network fees. Are people paying to use it? That's a sign of real demand. And for example, Ethereum is so expensive, but people are constantly using it, and it's the second largest crypto asset. So these metrics, they show you the real value, not just speculation, because anyone can hype a token or a project, but if nobody using it, it has no long-term value. It's just short-term hype. And just before we move on to the examples to show you where to check those metrics, I want to tell you that there is a very powerful part on the network effect. It says the value of a network grows with the square of the number of users. So if we want to simplify that, if you double the number of users, the value doesn't just double, it can grow 4 times or even more. That's why crypto networks like Bitcoin and Ethereum have become so valuable. Each new user increases the utility of the network for everyone else. So instead of asking what's the price, start asking how many people are using this? How fast is adoption growing? That's where the real alpha, the real value is. And now if we look at their websites where you can find all those on-chain metrics, and they're being updated regularly. For me, what I personally look at when I want to understand how a project is moving is the active users. For example, Token Terminal is a website where you can see the active users on a monthly basis, weekly basis, daily basis. And if we look at the monthly top projects, you can see BNB, Solana, Near, Aptos, Bitcoin, all of those blockchain and networks are performing very well over the past month or so. And the other indicator that I check quite often is the total value locked, the TVL. This actually measures the project growth, adoption, and the money that goes into that, how much is locked and moving across. And you can see that Ethereum and Solana are leading with BNB, Bitcoin. We also see SUI and Base as well in the top 10 So these are good indicators and metrics that are showing you the adoption, the growth, the pace at which this project is growing. And a lot of beginners miss something important here. Crypto doesn't live in isolation. It moves with global liquidity as well, the amount of money flowing through the financial system. So when central banks print money or loosen monetary policy, liquidity rises. And when liquidity rises, risk assets like crypto usually pump. When liquidity dries up, crypto falls. So apart from those metrics, tracking liquidity is also very important. Fed's balance sheets or global empty money supply, they can actually give you early signals of major crypto cycles. That's why keep an eye on those. And if you want to have the latest data, most up-to-date metrics, feel free to join Discord together with buy and sell signals. Recently, we've been buying a lot of projects and making good profits. And it's available on Discord. I'll drop a link to it in the comments and description below, and I'll be happy to welcome you as part of our community. We buy a lot of different altcoins, but also accumulating Bitcoin, because Bitcoin has fixed supply. It has strong security and a massive network effect. It's your digital gold. Other blockchains like Ethereum, Solana, or Avalanche are more like digital economies. They have inflation, they have smart contracts, and growing ecosystems. So their valuation depends more on how much activity happens on chain, how many applications, users, and value are flowing through them. It's not about comparing prices here with those altcoins. It's about comparing usage and growth, which is something a lot of us miss. So that's for me today. Thanks so much for watching. I'll see you in the next video.